Free and clear of the chatter from Wall Street, you're listening to Talking Stocks Over Beer, hosted by hedge fund veteran and newsletter writer Mike Alkin, who helps ordinary investors level the playing field against the pros by bringing you market insights and interviews with corporate executives and institutional investors. Mike sifts through all the noise of mainstream financial media and Wall Street to help you focus on what really matters in the markets. And now, here is your host, Mike Alkin.
Welcome to the podcast. It is Monday, October 29th, 2018. Hope you had a good weekend. I spent mine at a Halloween party. My wife and I went as peanut butter and jelly. I was peanut butter, she was jelly. And always feel a little silly, putting on a Halloween outfit. But last year I was pretty cool. I was Tom Cruise in Top Gun. So I wasn't sure how I felt about being peanut butter, but we decided, why not? I mean, if I think about what probably my favorite food is a peanut butter and jelly sandwich. I can't tell you how many times I've been traveling in a restaurant and I look at the menu and I say, oh, and I'll just whisper, I say, yeah, peanut butter and jelly. And that or grilled cheese. I'm a pretty plain eater. I've done that in some nice restaurants and usually they can deliver at my request. But, we eat normal food, regular food, but push come to shove, I really like a PBJ. So my wife said, well, I like PBJs too, so why don't we go as peanut butter and jelly? I said, okay. So that's what we did. I was peanut butter, she was jelly. And the night was going well, and I've been eating okay lately, so I've been eating pretty healthy. And then we went to there were two parties in the neighborhood. I went to the second party, and when we went to the second one, a little later in the night, had a couple of beers, not too much. I don't drink too much. I shut it down always after a couple of beers. But had a couple of beers at the first party, went to the second party, and they had tables of Taco Bell. And anyone who knows what White Castle is, they're just tiny little hamburgers called belly bombers. And so I hadn't eaten too much during the day, and I can't even tell you how many tacos and White Castle belly bombers I have. But it was well worth it because I won't have them again for another year. So that was Saturday. Yesterday, I'm talking to you here from Boston. I'm at the in downtown Boston. I spoke today at a Nuclear Energy Institute conference. So I'm up here for a couple of days, and I drove up yesterday. It was a nice 4-hour drive from New York, just listening to football, listening to Jets, listening to Giants, listening to when I ran out of range, I downloaded it on my phone, was able to listen over the web. So nice, easy drive. I'm up here, and of course it was Game 7 of the World Series. Not Game 7. It was the fifth game of the World Series. But if the Sox won last night, that was the series. So here I am in Boston, and all of a sudden I'm watching the Minnesota New Orleans game, and I'm going back and forth to the series. And I got stuff for some reason I forgot. I'm watching the Saints-Vikings game while I'm finishing my presentation for my talk today, and all of a sudden bedlam breaks loose outside. The horns honking, the screaming, and it went on, and it went on, and it went on because the Sox won the series. So it's pretty cool being in Boston. And being I am a Met fan and not a Yankee fan, I was celebrating, right? Why not? So, but they told us at the beginning of the conference today that Wednesday, when the conference ends, that the roads will be closed at 11 a.m. for the parade down here in Boston. So I might try and sneak out a little bit early. But so anyway, I hope you had a good weekend. So I'm here at the NEI conference. It's the Nuclear Energy Institute, and there are about 175 people here at the conference, and they typically, so it's mainly electric utilities who own nuclear power plants, and a lot of fuel buyers, the guys and ladies who buy the uranium and different parts of the fuel cycle. They buy, they contract the entire fuel cycle. And the NEI is a great organization. And Michael Snellenberger spoke, the activist, who was a former Greenie who turned nuclear power activist over the years. And Michael was the first up to speak, and he gave a long presentation of the history of nuclear power and just how safe it is and why he's such a proponent and why he switched. And so it was very, very interesting. And he talked about the really the poor messaging that the industry does from a safety standpoint. They don't put the cool in it, right? There's not enough cool in nuclear power in terms of really advocating the advantages of it. It's completely carbon free. It's always on. It's baseload power. It's reliable, right? And he said they talk about it in science terms. They don't make it real. So it was interesting to listen to him. And then a couple of us followed him. It's always a tough. He speaks for a living, right? So it's always tough when somebody speaks for a living. But I went up and I spoke, and it was interesting because I talked about. Obviously, there's these people in the audience are sitting here buying nuclear fuel, and they want to pay as little as they can for uranium. So I'm not going to go up there and hit them over the head with a sledgehammer and say, "Hey, listen, you're gonna pay me now or pay me later, but you're going to pay up." But so I, what I've talked about, and there's something, one of the organizations that track this stuff. One of the things I noticed in looking at all the data that's out there is there's not a lot of stuff that's really done on the mining cost side. It's not great stuff when all the data that's out there. So some of the one of the big associations, they can't use in the forward projections, they can't use the cost of an individual mine and what that would cost to bring online for antitrust purposes. That's beyond me. Don't ask. But so supply numbers are exaggerated because you may see all these mines that could come that are on the drawing board, but they're not going to see the light of day. They're not going to see the light of day when the cost of the project, when it requires $50, $60, $70 per pound uranium to be able to get financed, right? And I explain that the costs that you see, most of these companies, their costs are higher when they put the project on the drawing board. Some of those projects now are 5, 7, 8 years old. Those feasibility studies, you've had mining inflation. It's going to cost much higher. So for them ever to break ground, not only do they need $50, $60, $70 a pound uranium, because they'll never get it off the ground. They'll never get the financing for it. But those costs are probably even higher. So I wanted to bring that perspective to it because that's a perspective they don't hear on a regular basis, right? They hear about nuclear power and the demand side and the supply side, and they might see the costs if they were to look at a presentation, but they're not in the business of tracking uranium mining costs. And I explained to them that during a downturn in a bear market, when these uranium mining companies, and it's really true of any natural resource industry, when they're looking to raise capital, they're not in production. They're trying to stay alive. So what are they doing? They're out there looking to raise capital. And in the mining world, there are different level of costs. There's your C1 cash cost, your C2 cost, which includes different layers of cost, but there's probably 4 different layers, and you could dress it up a little bit, and you could show what it costs to pull out of the ground. It might be that could be your cash cost, but now your all-in sustaining cost, not the cost to maintain or to grow. I just opened a Diet Coke, excuse me. But to the cost to actually pull it out of the ground, maintain the business, reinvest in sustainable capital. So I explained to them that folks, the costs you're looking at are during the depth of a downturn, when companies are always looking to raise equity, they want to show you that their costs are really under control. And that's a category of costs, but it's very likely not they're all in. And when I analyze them, I say, okay, I get it. Right, so don't use that as your benchmark. If you, Mr. Fuel Buyer, are looking at it, their costs are much higher. And so I brought that, and I talked about it. And I showed a list of all the mines. Here are all the mines that are going to meet this future gap. Because when you look at demand, and you look at the primary mine supply and the secondary mine supply, there's a lot of white space. And even that's if you include inventories, right? So it's nuclear power is a growth business. That's what it is. Like it or not. It's growing. It's not a rapid grower, but it's a grower in a developing world. It's growing. It's growing. Could it grow 1%, 2%? But their growth. Russia, China, they're financing the nuclear fuel cycle. You want to build a reactor? No problem. We'll finance it for you. We'll lay out the money. We'll charge you a little bit of interest on it. Oh, by the way, you're going to buy the uranium. You're going to buy the conversion. You're going to buy the enrichment. and you're going to buy the fabrication from us, and we'll operate the plant for you. We'll operate it for a while, and we'll show you how to do it. And now we have parts of your energy security, right? So where your loyalty is going to lie. But it's growth business. So I wanted to share with them that when you see the growth of the business, number of reactors coming online, inclusive of the number of closures, and there are some closures around the world, of course. Cheap natural gas doesn't help in parts of the world, but when you look at the growth curve and you look at the primary mine supply and then the secondary sources of supply, and you draw down your inventories, there's white space that needs to be filled by new mines coming online. And by golly, those new mines are not coming online because of every major project out there. Every single one is in this cycle. I'm talking about the next 2-3 years. Is predicated. Those project financing is predicated on at least north of $50 uranium, and the price sits today at $28. And in uranium world, you got to think in terms of dog years. It doesn't come online and okay, we're going to turn it on. No. Project development is stopped. It takes 7, 10, 15 years in some instances to bring these online. With the price of uranium as low as it has been, people have stopped. Who's going to finance that? Okay, you go out and issue equity, dilute the shareholders to do what? Advance a project when you're nowhere near being able to recoup your costs and you're never going to get project financing? No. So my message to the fuel buyers was, hey, listen, you guys have a really hard job, especially in the U.S., right? Half the reactors are in regulated markets, and they have fuel riders. They could pass the costs on. They can do that. They go to a Public Utility Commission, they get a rate increase. The other half is in competitive markets. And natural gas being what it is with the U.S. and the shale plays, it's cheap. Now, I don't think that stays that way forever, but that's their environment they're at. Right? So when you look at the cost of nuclear fuel as a percentage of what a reactor is, right? You're probably fuel, if a reactor's costs are 32, 35, 38 dollars per megawatt hour, anywhere from $5.50 to $8 of that is fuel. But it's much smaller, but that's the front end fuel cycle, right? So that's U3O8 concentrate, that's conversion, enrichment, fabrication. So if it ranges 17 to 20% for everything, uranium itself is mid-single digits percentage of the overall cost. So whether you pay up a little bit or not, I understand your job's really hard. You're in a non-regulated competitive market, really difficult. But the reality is, guys, as long as you're in this business, where a small portion of your costs lie, if you don't, but it's the most important component, because if there's no U3O8 coming out of the ground, there's no reactor fuel burning. At the end of the day, that's the simple reality of it. So let me show you a list of all the projects and what the cost is to get those projects even sniffing production. Do they get financing? And we're a long way away. And that's the reality of it. And a lot of the stuff that they rely upon as their governing bodies and they look at forecasting out there, it counts those projects. So I was just bringing a different light to it. I think it was well received. I had some nice compliments. Had some people come up to me and say, wow, that's a nice perspective. Okay, so we'll see where that goes. But that's what I'm here in Boston, and interesting group of people, nice people, smart people, really smart people. But I'm here, and I had a nice time, listening to the Boston fans last night. We'll see what the next couple of days bring. Pretty crazy ride in the markets. I normally don't get into the market commentary, but I mean, it's just last week was brutal, right? You think about October, the Russell 2000 is down 12.5%. The NASDAQ is down 11%. The S&P is down 9%. The Dow is down 7%. And what are people focused on? Now, if you've been listening to the podcast, when I do talk, I have a bearish bent. I'm not hysterically bearish. But I keep talking about, if you've been a regular listener, yeah, you had great earnings growth, but what's next? The market's focused on rate of change. That's what matters. I don't care if you did 25%. What do you got for me next? Wall Street's a tough place. You want a friend, buy a dog. They don't care what you did yesterday. They care about tomorrow. And what's the worry now? Market's worried about growth, right? Sounds kind of odd, right? Real third quarter GDP was 3.5%. But the message that the stock market is sending is, what's next, right? So it's not worried about all that growth that's in the past. It's about what's tomorrow, what's to come. So, you mix in a really strong dollar. It makes it tough when we're exporting stuff. Kind of slowing down a little bit. You've got tariff issues. Raw materials, they're going up. You got a lot of political uncertainty, diplomatic uncertainty with what's going on with Saudi Arabia and Khashoggi, right? Price increases for consumers, they're having to deal with that. Rates are going up. Margins are pressured, and we're in earnings season. We're seeing it now. And guess what? Earnings have been fairly impressive. Third quarter earnings growth rate is 22.5%, up from 19 on September 30th, right? So not bad. You're not seeing estimates come down too much yet, but stock prices are coming down a lot harder, right? Why? Because of all these little pieces that you can put together, the market is starting the process that estimates are going to come down. And we're going to see downward revisions from higher rates, from tariffs, from higher operating costs. Just as the anniversary of those tax cuts that all these companies have enjoyed this year, they go to the curb. Anniversary. What do you got next? So this isn't talk about big valuations. It's talk about positioning of a portfolio, right? Market's forward-looking, and it's starting to price this stuff in. We're going to see where this week goes, right? Who knows? FANGs are taking it on the chin. Amazon came out, said sales are going to be a little bit lower. Netflix just raised another $2 billion. Tesla, I won't get into it. Tesla now, I'll do it for the next podcast. For my subscribers, they'll see what I think. But they gave it all they had, and they threw in the kitchen sink. And I think that's the best they're going to see. And I'm not going to get into too much. But my subscribers to my newsletter, I had them out of the position before the earnings because I suspected that this was going to take place. So we took our gains on the put positions and moved on. We'll revisit. I'm just waiting for the right price. So really that's what's going on in the markets. But we're going to spend a little time talking about a different aspect of the markets now. It's the capital raising side of the markets. It's what's going on in the institutional world. It's what's going on and where's money being allocated? What do people find interesting right now? Where are institutions looking to place money? Right? What's exciting to them? When I say institutions, pension plans, endowments, fund of funds, big family offices. Where are they rotating their capital into? And a friend of mine is in that business, and we're going to bring him on and talk about that. He also happens to have been an NFL linebacker for a number of years. So we're going to bring him on. And if you don't like football, check out of the first 10 minutes of the conversation because we're probably going to talk football. And then we're going to talk about that. So Chad Cascadden, welcome to the podcast.
Mike, thanks for having me back.
Well, I was just telling everyone that I was peanut butter and jelly. Christine and I were peanut butter and jelly. I was peanut butter, you were jelly, and you were the March of the Wooden Soldiers, you and your beautiful bride.
Yes. My wife, Melissa, was Snow White with full costume and hairdo and an apple and everything. And I was her, I guess, Prince.
Prince, yes, Prince Chad.
Yes, as opposed to, I was looking for a grumpy dwarf costume to be one of the 7 dwarves. I was going to be grumpy dwarf, but alas, Amazon did not have a costume my size, so therefore I went as the Prince.
Well, it was a good time. I didn't share with everyone some of the craziness that you see some of these people do at these get-togethers, but we'll leave it at that. I'm glad you and I are on the tame side. So let's talk. We're halfway through the season, NFL. I mean, you've had some surprise. I mean, the Rams, obviously at 8-0, look tremendous. The Saints last night, Saints are 6-1 now. They have a bye week. That's why they're not at 8 games. But we've seen some good football. Ratings are up a little bit. You know, the whole kneeling thing hasn't really taken the country by storm as it did last year. There's a couple of guys doing it, but you know, it seems like the ratings are back a little bit. And I mean, what's your take? You do a weekly show for the Jets on Yes Network. So talk to us. What's your takeaway from the first half of the season?
Sure, and not to correct you, but the show is on SNY.
SNY. Sorry.
Sports New York. Oh, Yes is the competing network. So.
Sorry.
Yeah. Yes is the home of the Giants and the Yankees, and SNY is the home of the Mets and the Jets. And
I can't keep track.
Yeah, so from sort of the cheap seat section that I currently sit in now, sort of how I see it is, the kneeling issue, that being what it is. You saw the fans give you their sense of what they felt about it, whether it's positive or negative, and they backed it up by tuning out. And that's, you saw viewership down. I want to say last year was down anywhere between 10-11%, and that was down from the year previous to that. But you also see the NFL evolve. And whether you like Goodell or not, or agree with him or not, the NFL does figure out eventually how to evolve, and they have. And they've changed some rules in the past year. The catch rule being one of them. They changed it. It's gotten better. I don't think you've had, well, other than maybe perhaps a few calls, the catch rule really hasn't changed any. It hasn't taken over and changed the outcome of a game. And I also think that the flex scheduling has helped. In other words, you're putting games on television on prime time, aka Thursday night, Sunday night, Monday night, that people want to watch.
Right.
And that flex scheduling has certainly helped, putting better games in front of more viewers. Thursday night has been a success, despite the fact that I hate Thursday night football. I like watching it. I just don't like it for players. I think it's too hard on the players, and I think over time, it's not a good thing if the NFL wants to continue to say we care about our players, yet you put us on Thursday night, and that's 3 days of rest. That's not good. So that being said, now you're starting to see the London games kick in, which means they come on at 9:30 Eastern time. So you get more viewership from people waking up to watch football. And people love their football. You're seeing offense like you've never seen before. You're seeing quarterbacks throwing for yards you've never seen before. And I think that's a function of rule change, and I think it's a function of different offenses that occurred in college starting to seep into the NFL. Sort of the spread, read, pass, option, the RPO type offenses. Trubisky coming in, Watson coming in.
What does that do? I wonder about that, right? Because normally the college running game, the quarterback who could run in college, that normally doesn't translate to the NFL, simply because, well, everyone is as fast as the one guy on the opposing team that you faced in college, but quarterbacks don't hold up, right? So they're looking to protect them in the pocket so that they don't get pounded, right? A quarterback may as well be wearing a red penny right now during the games, and that's right. I mean, the quarterbacks drive everything, but the run pass option or the read pass option, where everyone is when they're running, I mean, sure they could slide, but now they're fair game. What do you think that does to the longevity of quarterbacks as time goes on?
Well, when you describe RPO offenses, meaning run pass option, the run option doesn't necessarily mean the quarterback.
It doesn't necessarily mean quarterback, of course. But you see a lot of the quarterbacks now running the ball, right? I mean, so they're passing. They could hand off or they could pass. But a lot of these guys now also like to keep the ball on that too.
Well, I also think you've seen that rule change about hitting quarterbacks being extensively called in the preseason to show defenses, hey, we're serious about protecting the quarterback. If you so much so as sneeze and get boogers on these guys, we're going to call a penalty, which means, you come in with some slight hesitation to hitting these quarterbacks, which you will then see a change in how the quarterback feels. And that means the quarterback feels emboldened. So that means I'm going to run down the field, and I feel like, hey, if you hit me hard, you're going to get a penalty. So I'm going to squeak out as many yards as I can, and then I'm going to slide at the last second. And so there's a gray area between, when does he start sliding? And there, that gray area is going to favor the quarterback because quarterbacks sell.
Yeah,
they do. Nobody wants to see Aaron Rodgers back up. They just don't. And I'm not so sure I could tell you who Aaron Rodgers back up is. That's how bad he is. And so you're seeing that evolution of the NFL to a more open, a more pass-friendly, quarterback-friendly, offensive-friendly type of game, and defenses are going to have to adjust accordingly.
Yeah,
and the run pass option is not going away because that's what colleges are running, and so the NFL has to take what the colleges produce, and that's what they're starting to produce. And so you're seeing athletic, running, passing type quarterbacks who can think on their feet, where option is part of it. It's not your seven step drop back, read react quarterback. And I think you're starting to see that evolution coming into the league now with, the top four quarterbacks that are starting, the top four rookie quarterbacks that are starting in the NFL, Cleveland, Jets, Buffalo, Arizona. The quarterbacks' completion ratings are not great. They're in the 50s, but you can start to see they're leading their teams and they're switching their offenses and things are changing. And I think that's the trend. I think you're going to see more of that. And you're going to see guys like Trubisky at Chicago, who's kind of a run-pass option kind of guy. He's having a great year, and the offensive coordinator is working around it.
So you played in the NFL for a number of years, and you were an anomaly as an undrafted free agent. You came on, but it helps to be a linebacker running a 4.4 40. But that was 20 years ago now, right? So But as I think, there's the old school of thought where you'd get these high drafted quarterbacks, first rounders, they'd sit for a year and then they'd be groomed and come in. And you're seeing just the opposite right now. How complicated is that for them? Because obviously, I remember you and I talk a lot about it, and even though you're unimpressed that I was a high school quarterback, I don't know why, but still, the speed of the game itself. I know you've always said to me, it's unlike anything, right? You can imagine. So now the speed is there. How does that in your first year from a maturation process, from how fast is the game moving for them compared to what they saw in college, and how hard a transition is that, regardless of your physical skill set?
Sure. My take would be the physical skill set in the NFL. Most of these guys that are drafted and are currently playing, they've got the physical skill set. Then the question is on the mental skill set, can you think fast enough? And can you anticipate and react fast enough? And that's really where the leap, I find, in my experience, the leap for most guys who had a hard time making it in the NFL was the mental leap. They couldn't crunch the data fast enough. They couldn't anticipate versus reacting. And on a week-to-week basis, they weren't emotionally mature enough to deal with it, to take that pressure on. And to go out there and be leaders of men who are older than you. You're coming in, let's say, for instance, locally, Sam Darnold, who recently turned 21. He was 20 when he was drafted. So now you have a 21-year-old guy leading a franchise where you've got grown men with wives and families and everything of that sort, depending upon you for their livelihood. And that's a big challenge. And so I think what you're starting to see, though, and again, going back to looking at Cleveland, Arizona, Buffalo, the Jets, all starting rookie quarterbacks, How do you help them? You help them by getting the ball in their hands fast and into the playmakers. And if you look at all four of those teams, the average passing yard for actually all four of those is that they're at the bottom of the NFL. It's about 6 to 7 yards per attempt. And what that is saying to us is offensive coordinators are saying, well, let's get the ball in their hands quick so that they're not getting inundated by the defenses that are being thrown at them. So it's these quick passes, quick dumps, quick crosses, quick hooks. And so that's how offensive coordinators help out their quarterbacks and get them to, hey, let's get them some reps, but let's not let them sit back there and get killed by these defenses. Let's get it out of their hands fast and design offenses around that. And that's what you're seeing. And as time goes on, you'll start seeing them, going down the field a little bit more, and you'll start to see the maturation. And, again, talking about Sam Darnold and the Jets, I think you're seeing that. The offense is not ranked high. It's 25th in pass, it's 26th in run. Their turnovers are not good. They're number 28 in giveaways in the NFL. And so they're struggling, but Jeremy Bates, the offensive coordinator, is a brand new coordinator, and Sam Darnold is, he's a rookie, so they're learning together. And the Jets are going to just have to be patient with this. It's clear to me the kid can play. But he just needs some time. It's there. The structure's there. Now you just have to let this guy drink in all the information and let it happen.
How about across the river in New York? The New York Football Giants, a legendary, a storied franchise. They're 4-24 in their last 28 games. And, last year it was all about blaming the offensive line, and they made some changes, but they didn't go for a quarterback. Instead of, they brought in Nate Solder from New England to try and shore up the offensive line. They got rid of Eric Flowers on the right side, and they brought a rookie in to try and help the line. But there's a lot of talk on all over the national sports shows. Is Eli Manning done? And people either love Eli or they're not big fans of his. But at the end of the day, the guy, he's a first-class citizen. I mean, he's always has the right thing to say. He's won 2 Super Bowls. I'm not a big Eli fan. But as a person, from what I understand from people I know who know him, they say he's a fantastic guy. He's always, like I said, he's always has the right thing to say. Never slams the franchise. Never slams players. But I think he's an okay quarterback. I mean, a good quarterback. Don't get me wrong. Is he a Hall of Famer? Probably. First ballot, I'm not sure. But there's a lot of talk nationally that he's done. What's your take on that?
Well, personally, and I haven't voiced my opinion on him until recently because I wanted to see what having a full team this year with weapons, meaning you've got Odell Beckham healthy. You've now got Saquon Barkley at running back, who is a legit player in the NFL. You've got
he reminds me of Barry Sanders. I mean, he's unbelievable.
He's very special. He's very, very special. You went out and you got some offensive. You got an offensive lineman. You drafted a kid at guard in the second round. I wanted to see that, and what I've now seen is it's clear to me that although what Ben McAdoo did last year by benching Eli Manning perhaps was bad timing in the sense of the franchise just wasn't ready to move on from Eli Manning.
Right. Yeah.
I mean, the front office wasn't ready. It's clear to me now that Ben was not incorrect in doing so. Eli is a liability to this team. And if I were the front office, I would sincerely look hard in the mirror and say, where are we going with this franchise? Because it's clearly not with Eli Manning anymore. And
so even though the offensive line is like a sieve, so from what I see, it looks to me that he's just he's panicking in the pocket, that he's been beaten up so much the last couple of years that it feels as though he just, it's hard for him to stay in there. And or is it more than that? Is it a skill? Do you think his skill sets have just eroded?
I think it's a little bit of both. I've seen him miss throws where normally I think in the past he would have made, and I think he is so cautious about turning the ball over that he's unable to pull the trigger at times where he's standing in the pocket, padding his speed, padding the ball, and I'm yelling at the television, throw the ball. I mean, there's guys open. People are saying, well, guys aren't getting open. That's not true. guys are open, and he's just not making the decision. And perhaps it's, maybe he's a little gun shy. Maybe he's just gotten shellacked so many times that he just can't make that call and throw the ball. My honest opinion would be play it out for this year, and then and next year you got to let him go. You got to negotiate a way out of it. Look, I said it, as much as I enjoy Saquon Barkley and I think he's a top talent, I think the Giants did themselves a huge disservice when they didn't draft Sam Darnold at number 2, because after Baker Mayfield, who the Cleveland Browns think is going to be the guy, and maybe he is, but I sat there and shook my head because I said, oh my God, I think the Jets are going to get a chance at a generational talent, because I know that the Giants aren't going to pick them. And sure enough, they got Saquon Barkley, and the Jets picked up Sam Darnold, and I was just like, oh my God, Jets fan, you have no idea what just happened to you. So I think the Giants needed to reevaluate at quarterback. I think my personal opinion is Eli's done, and it's time to move on to the future. And it's been a great run. I mean, they've had him for, 12, 14 years now. It's incredible.
Yeah.
And he's got him 3 Super Bowls. It's amazing. But I think there's time and place for everything. And I think it's time that they move on.
So now for the 2 people who are left listening, because they could not care less about New York football or football in general, but that's the beauty of having my own podcast. I can talk about whatever the hell I want.
Talk about whatever you want.
And there's 1,000 other podcasts that people could pay, and I have no sponsors, and so it's all good. I purposely don't have sponsors, so nobody can tell me what I could talk about. Who's going to win the Super Bowl this year?
Boy, I tell you, currently it's hard to vote against the Rams. I mean, they look unstoppable. They look like they're firing on all cylinders midseason already. So that would be my pick in the NFC. And then the AFC, until someone tells me differently, the New England Patriots. And it's just comical how you can almost map out their year every year. In the September, they falter a couple of times. They may lose a game that you wouldn't expect. Maybe in October they'll do that too. But by November, they're starting to click and they're getting people back. And by December, they're cranking and they're rolling into the playoffs. And until somebody tells me differently, that's the team to beat. Maybe it's Pittsburgh. Maybe Pittsburgh puts up a fight against New England. I don't know. But that would be my pick, is probably Rams Patriots in the Super Bowl.
Okay.
Yeah.
Let's flip gears. So the other part of your life, right? You're in the capital introduction business, and I was where you introduce funds to capital allocators, and where you make introductions, and you really need to understand the different aspects of the different funds, different investment strategies, whether it's distressed investing, whether it's real estate investing, whatever it is. Talk about. I think it's interesting for people to know. So a lot of what drives capital markets is money flowing into it, and where capital is flowing. Some periods of time, like the big institutions, want to allocate money to funds that are focused on certain asset classes or certain types of investing strategies. Talk about what you see out there in the world. You talk to a lot of family offices, you talk to a lot of pension plans, or different capital allocators. What's your take of the world right now?
Yeah, well, on the family office side, I get the sense that they're more emboldened to find alternatives to things that perhaps they normally wouldn't have access to, or different investing ideas or different trading ideas where they can become, a bigger player in it. And I do think when seeking yield, I do think some of these alternatives provide an opportunity to get, outpaced returns. The passive index investing has been very profitable for a very long time. And you've seen a lot of the big pension funds and a lot of the big endowments and foundations going to a more passive, lower fee type of environment. But I think the smart money still realizes that active investment management, especially periods of time that are volatile or uncertain, which is kind of what you're bumping into now, has shown that it can outperform passive investing. So, the smart money that I've been speaking to recognizes this. So they're looking for ideas of what's not being looked at and what's being overlooked and where are the opportunities. And, in let's say in the uranium space, Mike, where you represent, I think that's an excellent spot that a lot of people have very little, if no, intelligence about it. Don't understand it, don't know it, understand the cycle of it, don't understand, how it's pulled out of the ground, how it's enriched, don't understand the geopolitical dynamics of it. And so people are looking and seeking and are thirsty for ideas like this, whether it's distressed opportunities within the capital stack of a private middle market company, depending on, what industry are they in. So you're starting to see a lot of questions about what's out there that we're not seeing. And, I think the hedge fund world has gotten beat up a lot over the last 5 to 7 years. I think you're going to see hedge funds do very well in the coming years because, the hedgies are out front, and volatility, usually when that happens, the hedge funds do very well. And so I think that's what
they don't do well in an upwardly trending environment where money is just flowing into the markets, and there's a big strong trend to the upside, right? Because they're still shorting stocks and they're trying to hedge the portfolio. But you're right, when volatility kicks in, and that's when the active management comes in. What about asset classes? I mean, how do you and I talk? You're very familiar with the real estate industry. For years, you were in the title insurance business, and you have a lot of contacts in the real estate world, and you've seen cap rates come down tremendously over time. So, you think about a cap rate as a PE. If at one time a cap rate was it 10, the PE equivalent is like 10 times. But when cap rates are 4, it's like 25 times. It's the inverse.
Yeah.
So, I mean, what do you see now on the real estate front?
Cap rates are low. Cap rates are really low, and investors are having a really challenging time justifying putting to work equity. And that equity comes in different forms. It can come from their own personal investments. They can be an allocator of capital for a pension fund or an insurance company. And so it depends. And sometimes real estate's funny because it's all in the eye of the beholder and whatever your time frame is. When the Chinese come in and they ended up buying the Waldorf Astoria, they're looking at it as a 50-year investment. They're going to run the hotel. They like brand names. And they wanted to redo it and make it into a condominium. It made sense. Unfortunately, I think Anbang ran into a couple of regulatory issues, and I think now it's probably on the market. But things like that, if you have an investment time horizon, perhaps that $2 billion, $2.5 billion price tag is not such a big deal. However, if it's your own money and you see that the market is hot, meaning white hot, maybe you don't allocate capital to that. But someone that has to allocate capital to it and has to invest into it because the mandate of that fund is it has to be invested, well, you may see them justify it, and you may see them buy it at a cap rate of 4, which is, it depending on what it is, that might be an okay long-term investment. As a short-term investment, maybe it's insane. So the funny thing about real estate is it's so driven by location and specific market. What works here in New York doesn't necessarily work in Charlotte, or doesn't work in Pittsburgh, or may not work in Miami. So you really got to be careful of, who's your local person, and are they really tied into the market, and do they really understand the dynamics? And then, of course, if you're going to redo the building, you've got to know the local politicians, and you got to know the zoning, codes and things of that sort. So there's a lot of moving parts in that real estate world.
You think people from your travels are reaching for returns?
Well, everybody's reaching. for returns. The question is how much are you willing to risk? You know,
yeah.
And I think that smart money to me seems to be cautious. They're not putting out money like they used to. They're kind of waiting to see what the market's doing. And so in what I'm seeing a lot of hesitation and a lot of pulling back and just a lot of waiting and seeing.
What are you doing? You know, one of the things that I've always been impressed with, you and I've known each other many years now, and for a undergrad in kinesiology and biology who wanted to be a doctor at Wisconsin, I'm always really impressed every time we talk of your business knowledge. So you went from a real science background to business, and you know, we talked last time you were on about the comparisons between really how what you've learned in football translates to the business world. And I tell my kids, you know, it's funny. Your son Jack is a ninth grader, and he's a beast of a running back. He's one of the top face-off lacrosse players in the country. He must take after his mother with his athletic ability. So, but you know, I mean, good genes, right? And he's a great athlete, you know. And we and I know from, and I always say this to my wife, right? For me, football taught me life lessons I'll take forever. Whether it's a 20-degree day and it's the end of practice and you're running sprints after a 3-hour practice and you want to throw up, and you always realize you could do more. You could always do more. You always could reach down and dig down, and it helps you handle adversity. And I knew it at the right at the high school level in football and at the college level in hockey. You took it to a whole different level, right? Being the freak athlete that you are, and only a handful of people get to do that. But the lessons, and they translate into business, though. There's so many things, so many disciplines that you see that translate from the athletics world. And by the way, you don't need to have been an athlete to be a hard worker. It's just these are my own personal life experiences, and I know you and I have talked, But now, I mean, talk a little bit for those who haven't heard the podcast before. Some of the lessons that you have taken, and if you've heard the podcast, they will have heard this probably before. But I always love it. How does your experience as a walk-on player at Wisconsin to winding up being a starting linebacker to winding up not getting drafted in the NFL and then walking on and playing 6-7 years in the NFL and being all rookie, you're on the all rookie team. What lessons did you take that you translate into your business world?
Well, that's a very, very open-ended and very good question, which I can go on for probably an hour, but I'll limit it to less than an hour. So what's interesting is the game of American football, not to confuse it with soccer football from Europe, is everyone that I've spoken to who've been successful at both football, but also, basketball, lacrosse or hockey or even soccer or whatnot, they always wax poetically about American football. And there's just something about that brotherhood of all 11 guys, whether it's offense or defense or special teams, that just seems to bring out a different persona, or it just brings out a different feeling than perhaps baseball or basketball or hockey. There's a certain feel to it, and I even get it from the former young kids like my oldest son Jack, who played in the Pee Wee football, which I coached, and he'll even say, and he's a freshman at Chaminade, and he's on the freshman football team, and he goes, "Dad, I miss that Thunder football days. I remember how much fun they were, and I remember the friends that I still have from that, and we still talk about Thunder football." And it's incredible that they're not talking about, winter basketball. They're not talking about lacrosse. It's football. There's just something about it. And, there's a brotherhood, I think, that's developed through the struggles of football. And it's, I also work and speak with a lot of ex-military people. And, ex-military people and football players, there's a lot of commonality. There's, we have the locker room, they have the barracks. They have,
right.
They have boot camp, we have fall camp. There's a lot of similarities, and you push your body to places where perhaps you wouldn't in baseball or even hockey or basketball, and you physically, you're running into each other, and you're getting after each other in a different way than you would any other sport. So I think,
but you also push your mind to your mind to different places too, right?
You push your mind to accept pain and accept exhaustion from working to levels that perhaps you wouldn't do otherwise. And that emotional and that mental pain tolerance allows you to transition into other parts of your world and other parts of the business, which is kind of what I did. I sort of looked at it and said, all right, let me apply similar principles that I learned while playing in the college ranks and in the pro ranks, and let me apply it to my business world and see if it works. And it does. It translates actually quite well. One of them being self-discipline. You have to learn how to be disciplined and do the work and think hard and ask really good questions. And two, associate yourself with really good people that maybe have a different point of view than yours, perhaps even a different political point of view of yours, who may be from a different country or might be a different state. That gives you perspective, and that gives you intellectual capital that you can't get otherwise. And then it's also teamwork. It's calling your friend and saying, hey, I need a little help here. Do you know someone that can help me with this? And then it's just longevity. I think athletes and military people, have a different sense of what work is. And I think that they have a higher tolerance for hard work over a longer period of time. And they don't get discouraged normally if something doesn't work right away. You take a look, you take a step back, you take a look at the film, you go over it, you debrief, or you go and you say, okay, where did we go right? Where did we go wrong? How do we fix that? How do we move forward? And I just don't think you get that as much in other sports as you perhaps would in football.
And I think for me, my big takeaway, and I teach my son, my Jack, sacrifice. It's not about you. You're one of 11 people, and it's about playing a role. And if you do your role right, and everyone does their role right, good things can happen. They may not. If they don't, you regroup and you kind of think about it. But it's about being part of something bigger than you, and it's not the selfish. It's not about me. It's about how can I help those other 10 guys? How can we all be better and all push our oars in the same direction? And for me, and like I said, you don't have to be an athlete. There's a really great, really smart thousands, millions of people who've never played and are listening to this going, what the hell are you talking about? And I get that. But just for me, boy, the lessons that you can take with you. And I struggle because my little guy now, he's in 7th grade and he's had a couple of concussions and and I had him as a kid, and as of right now at 3:27 p.m. on a Monday afternoon, I don't think it's affected me at 54 years old, but it might. And that's something I always worry about too, though. But we've had him checked, the neurologist, the doctors, and they say it's okay. I mean, how do you weigh the risk of playing now versus what and because we didn't know then. Back then, we had our bell rung, right? That's what it was called, and not unless you were in bed throwing up was a concussion. But how many times I can remember playing safety, I was a quarterback on offense safety, where you'd get up after hitting someone and say, "Oh my gosh, like holy cow, I'm seeing stars." Well, that was probably some sort of a concussion. And if I had them, you must have had a lot of them. So how do you weigh the risk reward there? How do you think about it?
Well, there's certainly some dramatically bad things that have occurred in some of the older players, and it's really unfortunate. And I don't doubt that playing professional football with the type of equipment and the type of medical treatment given in years past, that contributed to where they are today.
Right.
I think we've gotten smarter. I think the equipment has improved. I think the medical technology is certainly improving. The awareness of it is there. What's interesting is while football is certainly a contributor to concussions, it is certainly not the only sport that does so. As a matter of fact, soccer has a higher rate of concussions, as does women's lacrosse, and you know what else? Cheerleading. It's incredible how many concussions come from these types of sports where you don't think you can get a concussion as much as you would in football. Again, I'm not suggesting that football doesn't get concussions. I'm just saying concussions are everywhere. We've gotten smarter with it. I think the benefits of playing a sport like football versus the downside of it, I think it's overblown. All of my kids play football. I encourage them, if they want to, please do. If I sense that they're getting too many concussions too many times too quickly, then we're going to have another discussion, certainly. But I think the benefits far, far, far outweigh the negatives from that sport. And like everything else, life is not bubble wrapped. You can't bubble wrap life. You have to allow kids to go out there and bang around and get scrapes and bumps and nicks and bruises and burns. Because if you don't, they're not going to adjust to the real world as quickly or as what I think is beneficially and self-dependent and self-aware and self-disciplined as they would if you bubble wrap them.
Well, it's interesting. If I could tell you how many times, especially like Wall Street people, how many times I'll mention football. Yeah, my kid plays football, and they'll look at me like I'm doing something wrong as a parent. Like, ooh, really? I'm like, I don't know what to tell you. I mean, I feel okay with it, But you do. There's this really negative stigma with it.
And you know what? It's a reaction to what they've currently seen in the media. But when you peel back the onion and you really take a look at the stats and you take a look at what's being done now and the awareness that's going on, and the rule changes that have occurred, you've seen it in the NFL, which trickles down to college, which trickles down to high school, which trickles down into the little club Pop Warner teams. You're really starting to see a huge awareness of this is what it is, this is what we're doing to prevent it. Again, you can't prevent everything, but I do think that with equipment changes and awareness, I think you're going to minimize these risks as opposed to years past. So the benefits that you'll get from playing football, I think, just far outweigh the risks involved. And hopefully I'm case in point. I don't think I'd be who I am or where I'm at today if it weren't for football. I wouldn't have all these great stories. I wouldn't have all this great, all these things that football allowed me to do. I wouldn't have them, and I probably wouldn't be in New York, and I probably wouldn't be on this podcast if it weren't for football. So, I have a lot to thank football for, and it's been very good to me. And it's taught me a lot about business. I've translated a lot of the football acumen that I've had, and I've turned it into business. And just to give an example, that people are always asking me, what do you think of the Jets? Are they getting better? Should they fire the coaches? Should they fire the GM? What's going on there? And, I say this. I said, look, talent-wise, Sam Darnold is going to be your quarterback for the next 10 years. It just is. And, there's top line and bottom line in football. Top line is, can you score points? Can the offense, get out ahead? And the bottom line is defense. Defense, can you stop people from scoring? And also, can you get the penalty yardage down? And then when you look at a team, how is the team depth-wise? And depth-wise, a team will show how good they are by special teams. How good are they at special teams? Because that's where your depth comes in. Those are where your non-starters or partial-time starters play. And the Jets are number 1, number 2, and number 3 in special teams this year. Jason Myers is the number 1 kicker in football. He's the place kicker. He's number 1 this year. Leighton Edwards, your punter. He's number 3 this year. And the number 2 returner, both punt and kickoff, is Andre Roberts, who is playing incredibly well. And the blockers for both kickoff and kickoff return are doing very well. So the Jets are trending well. Their defense is playing well. They're number 3 in turnovers and takeaways. at plus 15. The trouble the Jets have currently is on offense, and it's not just the quarterback's fault. You have your receiver down. Your second receiver is a guy that was on the street last week. Your running back is gone. One of your tight ends got hurt. Your offensive line is, not tops in the NFL. And, how does that translate to business? Well, is the C-suite level, are they getting top line growth? Are they cutting costs on bottom line? Where are they in the cycle? Are they getting the right talent on the bus to get them to where they're going? What's their viewpoint on the current situation in the market? These are all very similar to how do you build a football team? And, that's sort of what I took from playing in the NFL to how does it translate to business? How does that translate into capital raising? And how does that help me function as a person here in society? How does that make me a better father? How does it make me a better husband? How does it make me a better friend? And these are all translatable skills that came from I learned from football.
Pretty cool stuff, man. Listen, thanks for joining.
Thanks, Mike.
I'm going to try and get out of Boston in one piece from the World Series celebrations that they're having here.
You know what? I forgot about that. Well, enjoy. Have a couple of Samuel Adams for me while you're up there.
I will. I'll talk to you later. Well, I hope you enjoyed the podcast today. I like to bring Chad on. He's been on a guest before. I always find Chad really interesting. I hope you do too. He brings a different perspective. If you don't like football, I apologize. But trying to make the connection between that and business, and thought it'd be interesting to hear what he's seeing from the guys who allocate capital, the guys and ladies who allocate capital. So that's it for me from Boston. Hopefully I get out of here pretty easily and not stuck behind the World Series parade. But we'll be back next week. Have a good week. Thanks.
The information presented on Talking Stocks Over a Beer is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.